The UK government is on a fiscal tightrope. One misstep and it's a guilt trip. As the Labour government heads into its annual conference next week, Chancellor Rachel Reeves has more than party politics to navigate. With gilt yields near historic highs and markets on edge, even small promises could carry big risks. Just this week, 10-year yields jumped without warning. So will the bond market buy what she's selling? Fiona Cincotta is Senior Market Analyst at Citi Index. So Fiona, why are we seeing such vulnerability in the UK bond market? Is there more than just politics at play?
UK government bonds have been shunned by global investors in recent auctions. That sent borrowing costs sharply higher. And I think what we're seeing here is scepticism among investors over the Chancellor's ability to get fiscal affairs in order, particularly with the budget in November coming into focus.
So what will traders be watching out for Reeves' speech next week? Do you expect any hints on that upcoming budget?
Yeah, there's a lot in focus here because obviously as far as the budget is concerned, she is in quite a difficult spot. We've seen growth being downwardly revised, it's looking weak, it's deteriorating. And at the same time, we've got this problem with borrowing costs, which are rising, also sticky inflation. And then that's not even starting on this black hole that that needs to be filled. Government borrowing has been high, its spending has been elevated. So the market is going to be looking for some sort of reassurance about how this can be overcome. But I think the problem is she's really in quite a difficult spot. And that's because in the manifesto, the Labour government said that they wouldn't be looking to raise any of those three main taxes. So that does mean that peripheral smaller taxes will probably be raised. They're probably not going to be looking at spending cuts. And the question is, will that be enough to calm the market? So any sense of reassurance about what she might be planning on doing at the budget may help to underpin confidence. But if the market doesn't like what she's saying, then we could see a deterioration in the outlook.
Well, the Bank of England will be closely watching as well. Will they be prepping their crisis-era toolkit to keep the bond market in check?
Well, I think there is a possibility that we could see, a rumblings in the bond market. And, if Rachel Reeves does step on the wrong stones, then there is a potential to see that similar sense of volatility that we saw back in 2022, in which case, yes, the Bank of England will need to be prepared to be able to step in and support the bond market. I don't think we're there quite yet, but we're definitely not too far away from that, especially if that message from the budget at the end of November isn't in line with what the bond market is hoping.
You did mention sticky inflation, Fiona, and both the Bank of England and OECD have sounded warnings. Will this dash plans for further cuts this year?
Yes, I think the Bank of England is also in a difficult situation here. Clearly, inflation is too high to be really considering further interest rate cuts. We are seeing maybe a slight weakening in the jobs market, but it hasn't really been showing through in wage growth, which is still, around that 4.7, 4.8 level, which is not consistent with a Bank of England interest rate level, inflation rate of target of 2%. So, with that in mind, I think it's going to be difficult for the Bank of England to be cutting rates, even if we do see growth slow down significantly towards the end of the year.
So finally, Fiona, Europe's largest asset manager is betting against the pound. Do you think the British currency will face pressure in the near term?
Yes, I think, there aren't too many positives as far as the pound concerned. It's interesting because, in a typical environment of sort of higher inflation and you would expect to see, and sort of a central bank which is showing signs of restraint as far as rate cuts are concerned, that can usually support a currency. But because of the fiscal concerns, political worries, and the economic outlook as far as growth is concerned, that's going to be keeping the pound under pressure, particularly against its peers such as the euro.
That was Fiona Cincotta from Citi Index. Don't forget, you can watch more videos on Reuters.com.